In Valentine red, similar I suppose colour on the market, but not so joyous.
Matching the market today, down by 1%, a red across most growth sectors of the market. But today was a light volume day, only $4.5 billion. If we have a look at what the market was focused in on, it does look like that Moody's downgrade really weighing down on the market. And we did see Moody's come out to downgrade 6 European nations, including Spain, Portugal, as well as Italy, on negative watch for the likes of France, the UK, as well as Austria. Also during our session, it was interesting to see the BOJ, the Bank of Japan, boosting its asset purchase program by 10 trillion yen to 65 trillion yen. Now that's had a positive impact on the Japanese market, which is actually in the black, up by 0.4%, but unfortunately not much of an effect on the Australian market. We're probably weighed down more by what's happening on the Shanghai Composite, and that's down by 0.6%. Some concerns about housing stocks there really dragging down the Shanghai Composite. So if we have a look across the Australian share market, it was the growth sectors which dragged down the market. We saw the energy, the materials, the industrial, the consumer discretionary sectors all losing more than 1% today, and only one sector managed again, and that was the very defensive area of the consumer staples sector, which was boosted up by a positive performance from Coca-Cola Amatil as well as from Woolies. Altogether, earnings season still very much in full swing. We saw GWA, which of course looks at housing products or residential housing products like bathroom and kitchen products, down by 6.9% after its half-year result, and Paladin falling 5.6% after its half-year result. So altogether, not a good day for investors.
In Fortescue.
I mean, it's been a fantastic move. Yesterday up by 5%, the market's down today, and still the stock's up by 2%. So continued speculation around Teck Resources. And if we have a look at Teck Resources, it's Canada's largest diversified miner. But if we have a look at the market capitalisation of it, it's about $23 billion. Now that compares to Fortescue, which has a market capitalisation of $17 billion. So not too far apart in terms of size, and that makes a full takeover unlikely. I guess what's been spurring on some of this takeover speculation is that Teck has been quite vocal about wanting some iron ore assets to add to its portfolio. And if we have a look at what's been driving along Teck's profit results, it's been a good result in terms of metallurgical coal. And there's probably quite a few synergies to come from adding iron ore assets to its portfolio. So a bit of speculation there, but given the size of Teck compared to Fortescue, it's probably unlikely that we're going to see a full takeover. Rather, Teck's probably just taking a strategic stake in Fortescue at this stage. But of course, takeover speculation, great news in terms of share prices. In terms of Fortescue as a stock, it is ramping up aggressively from 55 million tonnes per annum up to 95 million tonnes per annum, and then 155 million tonnes per annum. And that aggressive growth is expected to be good news for Fortescue. It's still got cash costs about $50 per tonne, and it's selling it at about $142 per tonne. So in terms of the underlying business case, still looking pretty strong there.